Hi, this is Sunita Murcha from Inter Real Estate Services. Today we actually have Michelle from Home Services Insurance Company. We are about to start an insurance provider within our corporation at this point. In the recent time of the natural earthquakes and the fire and water flooding that continues to happen, there are a lot of questions that our viewer has about what is going to be happening to my insurances. Many of us will have some renewals that will be coming in. We're not even sure whether those renewals are going to go or do we have to look for alternate options. So there are a lot of questions out there, and because of this, we actually have brought in a specialist for you, our Michelle, who's from Home Services, who's going to be going over what is happening in the insurance market. That'll help you answer most of your question. And there's something that you want to know more, leave the message at the bottom. We'll reach out to you, or you can reach out to us for any question that you may have. So we are going to go ahead and have Michelle start this presentation. That is going to be about 10 minutes kind of a time frame, and hopefully that'll answer your question. So Michelle, on to you. Go ahead.
Okay, excellent. Can you see my screen there?
Absolutely. Thank you, Michelle.
Okay, so today I want to give you an update on the California insurance market. We're going to call this the Wildfire Edition because, as we know, the state has encountered multiple years of devastating fires year after year. 2019 was a tough year. The photo on this picture is all too familiar. The insurance carriers are concerned about the urban wildlife interface. So what that means in layman terms is where development meets the wildlands. Okay, that's where all your beautiful homes are, of course, with views and hills, etc. So the carriers lost billions last year, billions. And what happens is they start tightening the market. So they start limiting their exposure. They want to pull back. So instead of just completely leaving the state, which some have done already, what they'll do is they'll start setting the policies up based on a fire line score. So they're looking at the fire line score. It's a software program that's going to tell them what's the probability of this home burning. It can do it down to the address level, and then it can also identify homes that would potentially be burned because of the wind-borne embers. Okay, and we've all seen that on the news and see how it spreads. Okay, so that being said, Fireline looks at three things. They look at the fuel, they look at the slope, and they look at the access. Now, a lot of us, we know what fuel is, we know what a slope is. We don't think about the access though. Can the fire truck get up the hill? Can it make the turn, right? Will it have its pumper truck? Can it fit up there? That's a huge thing for homes up in the hills especially. So what happens when wildfire exposure starts limiting the availability of insurance? The insurance companies have what's called a probable maximum loss. You'll see that they will start moratorium. Basically, they will not write in certain zip codes, and what happens is they feel it's an increase in the underwriting risk. They will start setting the policies up in the future for non-renewals. Now, last year, the companies had already started that, and then thank goodness the DOI, Department of Insurance, stepped in and they said, nope, you need to halt this. We got to get control of what's going on in this market. Thank goodness they really stepped in. But that is about to expire, so you may start getting a non-renewal. When that happens, don't panic. There are other things that that you can do. So if you're a realtor, you need insurance to close. If you're a buyer, you need insurance to close. Everybody needs to be able to qualify, right? So how are we going to do that? And then, of course, we want to stay abreast of the market and future sales if you're a realtor. So as far as what happens if you get that non-renewal or you're buying a new home and you find out, wow, my beautiful Saratoga Hills home is in a brush hazard, nobody wants to insure it, and now you panic. Don't panic. The state has a catch, what I call a catch-all. It's a fair plan. It's not where you want to go. It's the last place for insurance, but there's basically three sources. You have your standard insurance, so that would be State Farm, Farmers, Allstate, Travelers, Progressive, all your name brand companies. You have surplus lines. That's your non-admitted carriers or non-standard. What that is a company that does not have to participate in the California Guarantee Fund, which If the company goes belly up, there is basically no recourse for the client. Popular one in that category would be Lloyd's of London. Everybody's heard of Lloyd's.
Mhm.
When you've exhausted those, then you go to the FAIR plan. So a lot of people getting non-renewed, they're already into that category. On the non-renewal, it will say you can go to the FAIR plan. You go to the FAIR plan website, it's going to tell you, you really should get a broker. So clients can go by themselves or they can get a broker. It does not cost any difference. So please use a broker so you get the right coverage.
Yeah, because
Okay.
you know what are they looking for, details that I think the details are more important. Broker would know more about that.
Exactly. Yeah. Because one of the things they're going to ask the client to do is tell us how much you want to rebuild your house for.
Yeah.
To me, that is not the client's responsibility. That's my responsibility as a professional and working with the realtors as well. So FAIR plan, bare bones coverage, place of last resort. It's basically fire only coverage, and they give you, so here's what you get: fire, lightning, internal explosion, and smoke. You can add optional coverages, a package called extended coverage, which gives you wind, hail, riot, planes, vehicles, volcano, and vandalism and malicious mischief. Vandalism is a real important one if it's a rental property. Those seem to get vandalized quite a bit if they're between tenants. So FAIR plan does not cover theft, water damage, personal or landlord liability. Liability is huge, right? Especially in California, people are very litigious. They fall and trip down the front steps, they're going to sue you. If you don't have that liability part, you're going to be paying the claim out of your pocket. So what happens then? Two policies to make one. This is where your broker comes in. So you can go, number one, FAIR plan just by itself and have those couple of coverages covered for fire, basically. FAIR plan plus a DIC wrap. So DIC wrap is a difference in conditions. It's a policy that's basically going to bring in that water damage, theft, and liability coupled with the FAIR plan policy. So it's going to wrap around it, bring in the conditions that aren't covered, and make you as close as possible to whole. You're still not going to be like a regular preferred policy, but it's better than nothing. The last place we go is I've seen some carriers decline the DIC wraps recently. And in that case, we can go to a FAIR plan plus CPL, which is comprehensive personal liability. So basically you're going to get your FAIR plan coverages with a standalone liability policy, much more affordable. And that's basically it. The last page here is this is from the FAIR plan. It's a comparison sheet, and it talks about what the FAIR plan covers, what it doesn't cover, what the options are, and then it compares it to what they call ISO HO3, which is standard policy. And that's all I got for you.
That's really beautiful. It's really helpful, especially when we're not sure when our insurance premium are going to come for a renewal, what will be our situation. I want to ask you one more question, Michelle, if that's okay. When a client actually is looking to put a home insurance on the property, and we give them the address, and then they actually give us the premium based on the location, the condition, and what the property is of the value. And what the experience is that the many times that the coverage that the insurance company is actually suggesting is off the value of what the home is of a value right now, right? But when we go and rebuild, it would be a rebuild based on the cost can differ based on where you're located, what is the soil condition, and a total built up cost versus just the cost of what we are purchasing right now. So do you recommend, as a person who is looking to get an insurance on the home that I'm purchasing, that I get the coverage for what would be the cost of building the structure brand new? Or is it okay to take the coverage what the lender's insurance person is actually suggesting me based on what is the value of the property at that time?
That is a really, really loaded question. Lots of layers to that one. So you've got your market value, which of course in the Bay Area, it's very extremely high because there's such huge demand. So your market value is way up here. Market value includes the land. So keep in mind, if we have a fire, house goes down, land is still going to be there. So what we look at as an insurance company is we use a software program called Marshall, Swift, and Beck. It's very common. And basically we put all the features of the home and we calculate location multiplier because it's going to be more expensive if you're up in the hills. You got to get everything up there. Sometimes you have to have cranes to rebuild the home. So in that sense, we look at the debris removal, the cost of the construction, and we really want you to be rebuilt 100%. We don't want a person to have a loss and then end up at a point where their house is not going to be rebuilt to what they had before. And there were a lot of people in Camp Fire that were underinsured. So insured to the value of the rebuild cost of the home, it will not always match your market value.
Right. So it's always, I mean, when we're trying to get an insurance, what I've experienced even in last few days when the insurance thing was coming on, I got a lot of calls from the clients and they were like, I only need the cost of insurance of just building the structure, but there are other costs too that you want to kind of protect yourself. So have over insurance and under insurance. Does these insurance cover everything that is inside finishes also? Or these insurance coverages are only for the bare minimum, putting the structure back on the property?
Nope, there will be contents on there as well. Yes.
Okay. So that was sorry to pick this question apart from that thing is because I actually last week I had a lot of clients who actually called and say, oh, what is my cost of building in this area? Because I had put out a small presentation out there, hey, having full insurance coverage. And everybody was insured based on their market value of what they had bought the home for. And values have changed right now. So I thought to ask you this question because it will help those clients to understand that you want to get today's market construction value on your insurance coverage on the property.
Yeah, and I have seen a lot of insurance agents that they look at the house, okay, you're paying $750,000 for it. That's what we're going to insure it at. It's a 3-bedroom, 2-bath, 2-car garage rancher, 1,200 square feet. It is not $750 to replace it. It's the high demand because the amazing location, right?
That's right. That's right.
That's what you're paying for. So in that is real common. So the house is $750, $850. It's a basic rancher, beautiful home. The rebuild cost is probably going to come in at about $300.
Got it. Okay, beautiful. Well, thank you very much, Michelle. I really appreciate that. It was actually beautiful. And out there, everybody, if you have any question about the insurance policy on your property, when your renewal is coming up, or you are in the high hazard, if you want to look into your natural hazard report, we have in-house home services natural hazard report department as well, where we can pull out that out for you, as well as go over what would be your insurance premium if in case you are going to be experiencing any kind of a deniability from the current insurance. Reach out to us. This is Sunita Murchia, 408-916-6135, and we are here to help in any way, shape, or form. Thank you, Michelle.
Thank you. Have a great day, everybody. Bye-bye.